Set up. Hello Instagram, hello Facebook. You are tuning in for this week's episode of Mega Money Mondays, where I go live and I answer all of your burning money content questions, offer free money coaching. So if you guys have any questions, if you're just tuning in right now, I'm going to be answering the questions that were posted in the group over the last week and the questions that were DM'd to the team. But feel free to post your questions here and I will get to them as well. I'll give a couple minutes for everybody else to start joining. Hello Mel. Look at all you people joining. I love this. Hope everyone is having a beautiful day. For those of you that don't know, I'm in Canada and it's getting freaking cold here and I'm over it. So I'm here with my little blanket staying warm. Okay, let's get started, ladies. Again, if you have any questions, make sure to post them. I am here to help you build a bank account that never stops growing, all right? Let's freaking go. The first question we have right now. Hello, lovelies. Hello. I'm new to the group, but I started my investment journey about 6 months ago. My husband and I majorly paid off our debt last year, which has allowed us the financial freedom to allow us to invest. Amazing. Congratulations. I'm so excited for you. We want to start understanding the market and have other investment options. Are there any tools, articles, books, or anything that you might suggest to get more educated on the topic? Yes, ladies, yes. There are definitely a lot of books that can help you on your investment journey. Investing is so important because the way that things go, a lot of us believe, if we're doing good, that means that we are saving money. And saving money, hello, from Kentucky. If we're saving money, we're like, yeah, I'm saving money, I'm doing amazing things, and that is so good, and I'm so grateful that you guys are saving. That is amazing, but you need to be able to take it one step further. You need to actually take those savings, put them into investments so that they can grow and start working for you, because if your money is not working for you, your money is actually losing value because of inflation. So investing is a #1 priority, okay? We are never going to be able to save our way to retirement, okay? The average person, I believe it was, makes $1.5 million in their lifetime, and the average person is said to need $1.6 million to retire, meaning if you saved every dollar you ever made, you would still not have enough money to retire. The only way that we are able to get there is through investing. So some really great books. The first one, I always call it the Little Red Book of Common Sense Investing, but it's actually just a little red book called Common Sense Investing. It goes through different ETF strategies, different index fund strategies, so I think that is an amazing book if you are just starting out. However, it can be a little bit wordy, so that's something to watch out for. In addition to Unshakable by Tony Robbins. And when I first heard about this book, I was like, Tony Robbins? Why is Tony Robbins writing this investment book? Isn't he just a motivational speaker? Whatever. It is an amazing book. It is such a good book, and it really breaks down the cycles of the market, why mutual funds are not great investments, why you don't need a financial advisor, all of that kind of stuff. So super great book. I really love that one. In addition, if you are looking for more help in a way to, how do I get started investing? I'm saving money, I'm doing good there, but I actually want to start growing that money. Where do I start? We have a program called The Millionaire Investor, and it literally walks you through everything you need to know. Everything you need to know, from learning how to navigate the market, how to stop feeling scared that you're going to lose all of your money, because I know that's a fear that a lot of you guys have, and that's something that's holding you back. And the thing is, you don't actually lose money investing when you invest for the long term. If you diversify and you invest for the long term, your chances of losing money are very slim. I talk about the way to do this effectively in our course. It's a 12-module course. It is amazing. And if you guys sign up for the 30 days to 100K challenge, the team actually sends you a discount code for $100 off. So that is amazing. So if you guys are not in the 30 days to 100K challenge, it's a free challenge that we have. Goes through some of the basics, okay, to negotiating your bills, saving money, in addition to some money rules you guys should be following, okay, and then basics to setting up your investment account. So go through that, understand what you need to do to get started, and then to actually start choosing your investments and building your investment portfolio and making that money, building a bank account that never stops growing. Jump into our Millionaire Investor program. You can check it out. I will link it here afterwards. but you can check it out on our website under Learn How to Invest, okay? And it's called The Millionaire Investor. So amazing, amazing course. The women coming through there are doing big things, starting their investment portfolios. And for those of you who pay attention to the stock market, you might be like, but Nicole, stocks are down right now. The market's doing horrible. And we can look at this two ways. We can look at it and say the market's doing horrible, or we can look at it and say stocks are on sale. Stocks are on sale. The price that it was last week, it's less now. We can buy stuff on sale as long as we are investing for the long term. The short term ups and downs in the market, they don't mean anything, and we have to know that they're always going to happen. I believe the statistics are that every 2.5 years, a market pullback happens, meaning the market decreases by about 10 and sometimes up to 20%. But if we realize that that happens once every 2.5 years, we can come to expect it. It's just like a season. It's like winter is coming. Be prepared. Have some cash on hand so that when the prices go down, you can jump in and make some more money. I have a question here from Max Steele. Hello. I have a really good credit rating, but a small limit. Should I make my limit bigger so I can build my credit rating before I need to make sure my rating needs to be good? I think if you can be responsible with your credit and you are not spending more, then yes, having more credit available to you can help push up your credit score when it comes to your credit utilization rating. So typically you want to keep how much credit you are using under 30%. So if you increase the amount of credit you have available to you, it's a lot easier to stay under that 30% mark, which should in turn boost your credit score. Okay, I'm going to jump into the next question here. I'm at the beginning of saving money right now and I can only save $100 a month. Don't say only. I'm going to go back a second. Don't say only. Don't say I can only save $100 a month. I can only save $20 a month. I can only save whatever. It's not only. Saving something is better than saving nothing. And I see this as a reason why a lot of people don't get started. They're like, oh, well, you know, I don't have $20,000 to invest. No! You don't need $20,000 to start investing. You don't need to be rich to start doing these things. These things are the way that you get rich. You start small, you craft your strategy, and then you continue with it, right? The earlier you start, the better off you are. So I'll get back to this one. I'm saving $100 a month currently. Should I start by putting it in an emergency fund or an index fund ETF? First and foremost, you want to have an emergency fund. The reason why you want to have an emergency fund is because if you get into a situation where there are unexpected expenses, and remember, we will always have unexpected expenses, so we should learn to expect them, you're going to put yourself in this vicious cycle, right? If you don't have the money for an unexpected expense, it's probably going to go on a credit card or it's going to go on a line of credit, all right? And then you have to pay that back plus interest. So it's a lot better if you start your emergency fund, start with a baby emergency fund, okay? Have that as your first goal. We save $1,000. Then we work up to 3 to 6 months of expenses. Then we work up to 6 to 12 months of expenses, okay? First and foremost, you want to have the emergency fund before you start investing, and make sure whatever you are investing, you don't need that money for at least 4 to 5 years. The longer your time horizon for investing, the better off you are going to be. I did see another question here. I'm just going to go up. Looking forward to the answers of the questions asked this week in the Facebook group. Amazing. We are getting to them now. Another thing, I have a lot of people messaging me being like, you know, I'm seeing high yield savings accounts and the interest rates are like 0.5, but another one is 0.6, but should I hold out and wait and see if there's another one that comes up that's maybe like 0.7, or what if, you know, what if they change and I've already chosen one? I will say this, okay? The lenders, the banks that you are going to, they're in competition with each other, okay? If one of them starts to raise, the other ones will start to raise, all right? So I don't think you're making a bad choice by going out and getting a high yield savings account now. And essentially, when we start to get into this analysis paralysis, where we are focusing on all of these small details, we're focusing on all of these small details, and it is causing us to step back and be like, oh my God, there's too many options. There's too many options. I don't know what to do. I'm not going to be able to do it. I'm just going to wait. The better thing for you to do is just go out and start taking the action today. Stop waiting for the perfect time. Stop waiting for the perfect account, whatever it is. Go out and start taking action today. When you are stuck in analysis paralysis, I call that asking broke questions. We are asking broke questions. Should I do a 0.5% savings or 0.6% savings? If they're basically the same thing, like it's pennies on the dollar, it doesn't matter. Just go out there and do it. Start asking yourself the million-dollar questions, right? When should I start investing? How much should I be investing? Asking yourself, you know, oh, should I do this or this? And focusing on these small things that actually don't have that much of an impact overall are going to be reasons why you stay stuck, okay? So just get out there, focus on going out there and actually taking action. What most people do is they won't admit there's a problem, and then of those who do admit there's a problem, they won't actually go out and take any action, okay? And of those that actually take the action, those are the people that are going to be able to be successful, because most people are not going to take action. Most people are not going to seek the knowledge they need to in order to take the action. So you're seeking the knowledge. That's why you're here. You want to change your frickin' life, okay? And I applaud you. That is amazing. Let's change your life. But seeking all of the knowledge and absorbing it, and not doing anything with it is not getting you any further ahead, okay? You're still in the same situation. You just have more information, all right? So use that information to your benefit. All right. Let's go on to the next question. Question for you, I'm hoping you can help. My credit cards got out of hand and I'm trying to fix them with your challenge. I did cancel all unnecessary subscriptions the other day and removed a lot of random expenses. Amazing. So many of us don't realize there is shit that we are paying for that is still being charged to our app accounts, that is still being charged to our credit cards, our bank accounts, and we're like, oh my God, I didn't realize I'm still paying for Spotify Premium or whatever it is. Like, those are your hard-earned dollars. You're trading hours of your life, your limited life energy for dollars, and you're just throwing them away. Stop throwing them away. Go through everything. Make sure that you are paying for things that you actually need, that actually bring you value and joy, okay? We go through all of this in the 30 days to 100K challenge, how to do all of it, what categories to look through, how to start negotiating your bills, okay, all of that stuff. I have some stocks from a previous employer that I could sell off to pay a card or two. Is it worth cashing those in to get ahead, or potentially using it to pay off a loan that I have that's set to be paid off in March, or selling them and reinvesting? I mean, it's difficult for me to tell you, what I would do in that situation, because I don't know who your employer is, how much money you have in those stocks, if it's through a retirement account like a 401k or an RRSP. Those are super important to know as well, because if you have it in one of those accounts, there could be penalties to withdrawing that money. And typically we never want to take money out of our retirement savings unless it is a last resort. So my first and foremost would be, I don't know who your company is. I don't invest in single stocks because I think they're too risky, right? I like to diversify my investments. I want to own pieces of the biggest and best all around the world, okay? Because I don't want to be overexposed in one industry, to one company, to one physical geographical location. I don't want to be overexposed in any of that. I want to have a little bit of the biggest and best everywhere to protect myself and give myself the lowest possibility of losing money, because we don't want to lose money here, right? We're here to make money. So essentially, I don't know who your employer is. Again, I don't know if they're very, in an industry that is not going to be viable in the future. Like, you know what I mean? So I think it's important to go through that. Do you believe in the employer? Do you believe in their stocks? Do you believe that they're going to keep increasing in value? Those are some questions that you'll have to ask yourself. And again, I would never really sell off any of my retirement savings in order to start paying off credit card bills and stuff. I think the best thing that you can do is start looking at cutting your expenses on the daily, or potentially making more money, because there's always a limit to how much we can cut, but no limit to how much we can make, okay? I have a question here. Planning to buy a house in 2020, 2021, I see your comment after, Natasha. I'm an immigrant, 3 years now with status pending. Either way, I see it as an investment. Buy now and start building, or if I have to leave, it's a holiday home. Is it wise? What I say to my clients typically, for those of you who don't know, I have a real estate background. I'm actually a registered real estate broker as well, so if you have real estate questions, you can pop them in there as well. What I say to my clients is, the same way when you're buying a home, that's how you're buying your stocks and everything as well too. You should be buying for the long term. So can you hold that property for at least 5 years? And I think this is a big mistake that people make. They buy their primary residence, meaning their home that they're going to live in, and they don't think about it as an investment. Meanwhile, this is like the most expensive thing that you are ever going to purchase in your life. A home is the most expensive thing that you will ever purchase in your life. And if we don't start thinking about it as an investment, or thinking about it as a wealth building tool, we are going to be put in situations where we could be potentially losing money. We strategically bought our first home not in a building that we wanted to live in. You know, it was at the lower end of our budget, but we didn't want to overextend ourselves. But we bought in an area in a building that we knew had potential. Did we want to live there forever? No. Was it my dream home? No. But I made the sacrifice then, bought that property then, knowing that I saw potential in it, okay, using wealth building strategies, and flipped that home in 2 years for $150,000 profit. Now I know there's been some people that are like, 150 grand, that's not even that much money. First of all, that 150 grand is not taxed because it was my primary residence, okay? So that's like somebody else working in your house, making $75,000 a year and just giving you that money, literally just giving you $75,000 a year, and you did nothing other than live in your house. So I think if I'm gonna make $150,000 tax-free in 2 years for doing nothing other than just living my house that I would have done anyways, I think that's the way to go about it. I talk more about this as well in my smart money home buying method. So I know a lot of you had questions about, hey Nicole, well, how do you actually buy properties with wealth building in mind? What do you look for in a neighborhood? What do you look for in a building? How do you add value? How do you make money off of your house? How can you start to live for free? Okay, and I talk about all of this in the ebook. So again, you guys can check out my website. I'll probably link it down here below if I remember as well, but it's a smart money home buying method. I think it's 29 bucks on our website, and it literally goes through everything that you need to know and everything that I have done with buying my first home, and even how I bought my second home, right? We flipped that home for $150,000 profit. We bought our new home, but we bought again strategically with wealth building in mind. This property has gone up by over $200,000 in the last year, okay, because I bought strategically. So again, it all has to do with kind of the strategy, buying your home with wealth building in mind. So I think if you are able to buy with wealth building in mind, in addition to buying a home that you can hold for the longer term, then you could be in a good position to do that. However, you need to make sure that you're buying and your rents are going to cover your mortgage, because if your rents are not covering your mortgage, if you're going to rent that out after when you leave the country, you're paying to have this home there. Like, it doesn't make any sense, right? You've bought yourself a job, you've bought yourself a liability, okay? Because you are now working to support that, all right? And you have tenants in there, and it's not a good time, right? When we are looking at investing in a property, even our primary residence, we want to make sure that we are in an area where rents are high enough to cover our expenses, and prices are going to be able to go up so that we can benefit from that appreciation. When you buy a rental property, you can make money 3 ways, but 2 ways essentially, okay? You make it from your monthly rents, and then you also make it from the appreciation, meaning how much the value of the property goes up. Why real estate is so amazing is if you had, say, $50,000 and you invested it and you bought a $500,000 home, okay? And the real estate market went up by 10% that year. The price of the home went up by 10%, not just based on your investment. So that $500,000, that now became $550,000, meaning you made $50,000 in 1 year from doing nothing. That is a 100% return on your money, versus if you had put that $50,000 into the stock market and you had a 10% return there, you would have only made $5,000. Okay, so real estate can really be the way to build wealth, and you don't need to own multiple properties to do it. If you buy your own home strategically, you can build massive wealth with your primary residence. Okay, the next question here. Hey ladies, hello. I've been interested in buying some stock. I considered selling some of my company stock to do so. Okay, another similar question. I said as much to my supervisor, and he told me, since I bought a home, to hold off because it could mess up your taxes. Any idea what he meant by that, and what are your thoughts? Selling some of your company stock. So if you sell some of your company stock, that if you've made a profit off of that, then that could potentially be considered income. Maybe that's what he's talking about, right? So either income or capital gains, so you would have to pay taxes on that. I'm not really sure how that's kind of going into buying a house. I mean, the lending criteria per country and per state are all very different. So I'm not sure I can add a lot of value to this question right here, because I'm not entirely sure what he was talking about. But if you are on here and you want to add some more information, I'm happy to go through all of that with you, but I don't think I have enough information to give you a good answer on this one right now, so sorry about that. I have another question here from Carolyn. Hello, Carolyn. I've been investing into 2 Acorns accounts. They're IRAs, that's great. Do you think Acorns is okay? So I don't personally have experience with them. My understanding is that, you know, Investing something is better than nothing. However, if we don't have an investing strategy, meaning how much money we are actually going to be putting into those investments every month and reverse engineering our goals, then we could be left with not enough money to reach our goals. So for example, if you were investing in these Acorns accounts because you're using them for retirement, you need to reverse engineer your goal. You need to say, well, how much money do I need in retirement? And break that down and figure out how much you need to be saving today in order to be able to make that goal. If we are not reverse engineering it and we're like, okay, we're gonna put $5 here and there, it doesn't give us the plan that we need in order to be successful. We're kind of throwing it up in the air and going, okay, I hope this works, right? So I think we need to be more intentional with what we are doing and more intentional about what our goals are, and then reverse engineering them so that we can really figure out, okay, what's our retirement lifestyle that we want? How much money do we actually need in retirement? A lot of professionals will say you need 70 to 80% of your pre-retirement income. So if you need 70 to 80% of your pre-retirement income, what does that look like? What's your income right now? Maybe you need more than that. Maybe you're like, Nicole, I'm gonna go on a cruise once a month and I'm gonna do all of these expensive things. That's great. Maybe you need more money. Maybe you're like, hey Nicole, I'm gonna sell everything I own and live in a Winnebago and just drive around the country. Okay, maybe you need less money because you're going to have a house to sell and other assets and that kind of thing. So I think you need to look at your whole financial picture, okay? Understand how much money you need, how much money you have, what your goal actually is, and then reverse engineer it based on what you're actually investing in. Because there's going to be different returns based on your different investments, right? If you are in a very balanced portfolio, meaning you have, say, 50% stocks and 50% bonds, you're not going to have the same potential for growth as somebody who is, say, 80% stocks, 90% stocks, because the stocks or ETFs or whatever are where you get your growth from, okay? So make sure you remember that. Let's go to the next question. I don't have anything set up financially yet, but I do have about $1,000 to start. What should be my first move with $1,000? So we talked about this a little bit in the beginning of the live, but essentially you want to make sure that you are going through and making sure that you have an emergency fund. Additionally, you also want to make sure that you don't need that money in the next 4 to 5 years. If you already have a fully funded emergency fund, if you don't need that money for the next 4 to 5 years, can you start investing that? Yeah, 100%. The first steps are going to be to open your brokerage account. You're going to want to look into tax sheltered accounts, right? Because the best thing for us to do is to have our money grow and not have to pay a ton of taxes on it. So look into tax sheltered accounts for your area. We go through a lot of this in the 30 days to 100K challenge. So again, if you're not in there, I would highly, highly recommend. It is in the link in our bio on Instagram and TikTok. In addition, you're going to want to think about, we go back, okay, so we have $1,000 to start. We have our investment account set up. We have the actual account, so your TFSA, your RSP, your IRA, whatever it is, okay? And you're going to want to open those accounts and then you want to start transferring money into it. Maybe you don't want to transfer it all at one time because maybe you want to use dollar cost averaging, okay? Buying small bits of investments over time to lower your liability in terms of how much you're buying the stock for or the ETF for, because the prices fluctuate daily, they fluctuate hourly, by the minute, right? So we want to make sure we're never buying everything all at the top, and that's why typically it's not recommended to dump all of your money in at the same time. It's a little bit more detailed than this in terms of the strategies and that kind of thing, but I would say first and foremost, emergency fund, then opening up your brokerage account either through a bank or through an app like a Wealthsimple or something like that, like whatever you are comfortable with, doing research into those banks and apps and the fees and the commissions and all of that stuff, and then understanding what tax sheltered accounts that you can use, okay, putting your money in there and then actually starting to select your investments. Again, we go through all of this in detail, step by step, exactly what you need to do in the Millionaire Investor. So if you want more information, more specific information about how you can actually start building your own personalized portfolio based on who you are as an investor, what your goals are, okay, and literally step by step, like from opening the account to choosing the investments to creating your strategy, and it is a lot easier than you guys think it is. I promise you, I spend maybe an hour or two a year going through my investments because it does not need to be difficult, okay? I have a question here From Zara, I hope I'm pronouncing that correctly. That's a beautiful name though, Zara. I had posted a question on the Facebook group. I have 3 personal loans. I think we have your question here, but I'll get to it here on the live. I have 3 personal loans ranging from 33.99% to 45% and 3 credit cards with 19.9% interest. My husband says lowering our credit card balance is important right now since the credit card percent is recurring and shows up on every statement, whereas the loan percentage is already calculated and spread over all of the payments. What's your suggestion on that? Overall, those are very, very high loan amounts. 33%, 45%, like those are astronomically high, okay? And I need you to understand that because that's pretty close to loan shark category. I would definitely say you want to work on trying to reduce those loan amounts, negotiating them first and foremost to bring those down. And yes, typically what you want to do is put your money towards your highest interest debts first, because if you are paying 45% interest, that is a lot of money. You're paying 45% interest. Like I think my best advice to you would be to pull up a credit card calculator online and really go through how much money you are paying in interest every month to these high interest loans. I think regardless of credit score, regardless of all of that other stuff, you need to be paying the minimum payment on all of your loans, but then first and foremost, attacking those high interest loans first. If you had loans that were like, 5% or 6%, and then you had the credit card at 19.9%, then I'd say, yeah, okay, attack the credit card first. But when you have loans at 45% and 33%, you 100% need to put the money there first. There are 2 different strategies. You can use the avalanche strategy or the snowball method. So the avalanche method is where you attack the highest interest debts first, okay? And the reason being is because that is where you end up saving the most money. When you pay off the highest interest debts first, you save the most amount of money doing that. There are calculators online that can show you that, so you can go through and put all of your different interest rates in, all of your different balances in, and it'll show you how much money you will save by paying off the highest interest debts first. That said, you can also do the snowball method. Now, the snowball method, I don't personally agree with, but sometimes people may need it in order to help them keep going. So the premise of the snowball method is that essentially you attack your smallest debts first. So if you had like $1,000 card and a $5,000 card and a $20,000 card, you would attack the $1,000 one first, regardless of the interest rates. And the premise behind that is psychologically, it may pump you up so that you can keep going, so that you're like, okay, you know what? I'm paying this off and I'm feeling good about it, and it can help you continue down that path. However, from a purely numbers standpoint, the avalanche method, where you are paying off your highest interest debts first, are the best option for you. Okay, again, check out some credit card calculators online. You can search snowball versus avalanche calculator, and you can go through and see what the different numbers are, so that you can kind of go through exactly what those different scenarios would look like for you from a numbers perspective. Okay, let me get back to the questions here. So excited for this challenge and to be part of this group. Yes, another 100K to 30 days to 100K challenger, mega money babe, let's go. I have a question for Nicole. I'm currently a little over $40,000 in credit card debt, and with my line of credit, I can pay off one of my credit cards in full with savings and the remainder of part of the line of credit. This would leave me with about $1,500 left in my emergency fund. However, I would be able to close the credit card down completely, cancel this card, which comes with an annual fee, and wouldn't be accruing 19% interest on it, but then my savings would be lowered. On the fence about what to do. I am currently on CERB and won't be back to work full-time until January at the earliest, which means I'm just managing my debt and savings, but will not be able to make any large contributions to either. So for those of you who don't know, CERB is the Canada Emergency Response Benefit. So we have, it's kind of like an unemployment thing here. If you've been laid off due to COVID, you can collect CERB. If you're currently not working, I would not recommend depleting your savings to pay off all of your debt. The reason being is if we're in a situation where we're not bringing in more income and we don't know when we're going to be able to start working again, we really need to make sure we have enough savings to get us through that time. Otherwise, it's going to be a vicious cycle. So I would go through your numbers, okay, and see how much money you have that you are spending on your necessities every month. all right? Go through and what should a fully funded emergency fund look like for you? I would probably try to save somewhere close to 6 months because again, you said maybe you'll go back in January. I would not put all of my money on paying my debt off right now, because if you put all of your money on paying your debt off and then you don't go back to work, you're just going to have to keep going back into debt. So I understand that you're paying the interest on that. But right now, when we don't know what's happening in the world, cash is king. So I would not be taking all of that to pay off the debt. You might want to put a little bit on there. I don't know what your total financial situation looks like. So I would say, go through, look at your financial situation, understand what are your bare bones expenses, how much money do you actually have in that savings account. I don't know what industry you work in. Is it plausible that you're going to go back in January, or are you, working in hotels and maybe they're never going to open again, right? So I can't tell you that. So I would need some more information there, but I think definitely you want to look at what's going on with your job, with your industry, how much money you actually need to get you through this time, okay, and do some calculations there before you decide how much money you're going to start putting on that debt. Should you pay it off when you go back to work full time? I would still try to keep some money in your emergency fund and start looking at how much money you're making every month and how much money you can start allocating to that. So yes, you can use some of your savings for that, but it depends on how much money you need in your emergency fund. Because again, we don't know if there's going to be a wave 3, a wave 4, like we don't know what's happening in the world right now. And again, cash is king. Okay. I think I saw another question on here. Thoughts on real estate wholesaling? Doesn't work in Canada. It doesn't really work in Canada. That's more of a thing that happens in the United States. Wholesaling real estate is essentially when you are buying a house, okay? You're buying a house from the seller for a lower price than what you expect to be able to sell it for before it closes. So essentially you're buying the house, you have the contract, and you are then selling the rights to that contract to somebody else and making a profit off of it. I personally think it can be super risky because now you have a contract to buy that house, you're buying that house, and you are hoping that you are going to be able to find somebody else to buy it from you for a profit. So I personally think it's risky. That's not something that I would personally do. However, if that's something you're open to, I'm probably not the best person to speak on it because when I look at my investment strategies, I am a little bit more risk averse. Not in the sense that, I only own bonds or something like that. Like I don't own any bonds. I own all ETFs, so all stocks. However, I don't like to lose money. I don't want to lose money, right? I don't want you guys to lose money. And there's these, things like wholesaling and that kind of thing, cryptocurrency, Forex, whatever, day trading stocks. That's not something that I would ever personally go into. I look at long-term investing, okay? Because the way that you provide some sort of safety for yourself when you are investing is making sure that you don't need that money for a long time. You don't need that money for a long time. You can hold that investment for a long time, and the longer you can hold it for, the better off you end up being, okay? I'm just gonna go back through this. You are welcome, Heather. Okay, couple more questions here. Oh, sorry, going back to this other question, it looks like there was another part to it. So when they were asking about, should I be paying off all of my credit card debt, they said I also live with my parents and pay minimal rent and living expenses. So definitely, like going back to what I was saying, go through what your living expenses are. Do you have a fully funded emergency fund? How much money do you need for that? If you don't need as much money and you have a ton of surplus, then yeah, maybe you want to put some of it onto your debt, but make sure that you are covered first and foremost and have enough money for your expenses for the next at least 6 months, right? We're going to say 6 to 12 months of bare bones living expenses. How are stocks cash flow? Because you have to sell them to get money liquid. Stocks are not cash flow. Stocks are not cash flow. You're buying an asset. And this is why I don't trade, I invest. When you trade, you are buying a stock or whatever here and there. You're trading in and out of it very quickly, sometimes multiple times in the same day. Okay, and that's how you lose money. When we are trying to get rich quick, if somebody is telling you that you can get rich quick, it's risky and you're probably going to lose money, right? The people that lose money are the people that are trying to get rich quick. There's no get rich quick. There is get rich slow and steady, but it can be very, very profitable. It can be, helping you to build wealth in the long term. So if you're coming here and you're like, hey, I want to buy some stocks and I'm going to be a millionaire tomorrow. No, you're not going to be a millionaire tomorrow, and I'm not going to tell you that. That's BS, right? But if you start making the right decisions today, you can be a millionaire in the future. So no, stocks are not somewhere that you're going to have liquid money right away. You are benefiting from the stock going up over a long period of time. That is what I personally teach. I want to open a high yield savings account. Rates are low, but still better than normal savings. What's a good account to move over to? I don't know where you are, honey. But I know here I use EQ Bank. So in Canada, EQ Bank, what you want to do is probably look for an online bank because they don't have physical locations that they have to pay for and as much staff and that kind of thing. So because they're saving money there, they are able to pass those savings back to their customers in by the way of, higher interest rates. And that's where you get those high yield savings accounts. Typically, the best ones are through the online banks. Just make sure you're vetting who the bank actually is, right? That your money is insured, that's going in there, that it's not some sketchy, side of the road, whatever, right? Okay. Next question. Hey guys, I'm trying to figure out what I should do for my student loans. I'm still in school, getting my PharmD degree. Amazing. Good for you, honey. I'm working full time, and the only real payment I have is a car payment. I was a part of the 30 days to 100K challenge, and I'm really looking at saving and paying my loans before I even graduate. Amazing. Good for you. I know there's a few methods of paying loans, but I'm stuck between paying the small loans off first and paying off the loans with the highest interest rate first. Personally, I always say paying the loans with the highest interest rate first. Again, you can go onto some of those calculators online, Google snowball versus avalanche calculator, and you can throw in all of your different debts in there and their respective interest rates, and it'll tell you, hey, if you do this with the snowball method, this is how much you will pay in total, and if you do this with the avalanche method, this is how much you'll pay in total, and this is how much money you could save by choosing either one of these. But I think 99% of the time, the avalanche method, where you are paying the highest interest rates first, is the best way to go. Is using the Stash app to invest in ETFs tax deferred like a Roth IRA? I don't personally use the Stash app, but you have, basically the way it works is you have a brokerage, okay? And then you have an account with the brokerage. Think of the brokerage like a bank. You have to open an account with the bank, okay? And from there, in that account is how you make your investments. So you would have to open up, if you wanted to invest through an IRA, you would have to open up an IRA through the brokerage, put your money into the IRA, and then choose your investments that you want the IRA to be invested in. Okay, one more or maybe two more questions here. One more question. Hey ladies, I need some help. I'm doing research on where to go for investing in ETFs, index funds, and bonds into one account. I really want to invest, but I'm not sure where to start. Which bank or credit union should I go to? More background. I'm 20 years old, LA native. Living in LA is very expensive. Basically living off EDD because I was laid off. Since then, I'm focusing on building myself, handling money, following my dreams as an artist. Amazing, honey. I'm finishing college full time. It's hard to do college and work even if it's just part time. So again, I know a lot of you are like, hey, I'm going to start investing and I'm just going to make all of this money right now and I'm going to be super rich and I'm going to be able to go out and buy all the stuff that I want. And that's amazing. But again, I don't teach short-term investing. Short-term investing is called trading, okay? And when you are trading, it is akin to taking your retirement savings, going to the casino, and throwing them down on black, okay? We don't want to do that. We don't want to gamble with our money, okay? That's not what I teach. So if you are in a situation where you are currently laid off, okay, then again, first and foremost, you need to make sure that you have that emergency fund. Once you have your emergency fund, any money that you are investing, you need to make sure that you don't need that money for at least 4 to 5 years, okay? The longer the timeline before you need that money, the safer you are and the better off you are going to be. How to start investing? Should we start now? Yes, you should always start now. The best time to start investing was yesterday, and the second best time to start is today, and this is because of the power of compound interest, okay? The longer you have your investments invested, the more money your money is making, okay? Your money will grow and that money will grow and the money that you've made will continue to grow. Your money is working for you and making more money, and in turn that money is making more money. This is the way that you build wealth. This is the way that you get rich. Over periods of time so that you can take advantage of the powers of compound interest. This also happens with real estate as well in terms of appreciation. If you buy into an area that is going to see above average returns in terms of appreciation, you can benefit from that as well. So not only is your initial investment there, but you have the whole price of the house that is growing and growing and growing. Because remember that initial example from before, if you had your $500,000 house and that increased by $50,000 because the prices went up by 10%, the next year, if it goes up by 10% again, you're making $55,000, okay? And it's going to continue to go up like that because your interest is going to build interest and build interest. So it's over time is where you're going to be able to really capitalize off of the gains from your stocks, your investments, your real estate, okay? When you start, sorry for being that broke. Not sure what that means, honey. I think the biggest thing is a lot of people say they don't have the money to save and they don't have the money to invest. And I think there's a big difference between being broke and being poor. When we are poor, that means that we have an extenuating circumstance that is preventing us from being able to do what we want to or need to do economically, okay? And that is a situation and it can be very difficult to break out of that, but not impossible. When we are broke, like most people are broke. Most people think they're poor, but they are actually broke. Broke in and of itself is a decision. If you have the ability to change your situation, to save more money, to make more money, to cut expenses, to change your lifestyle, and you are going to continuously, buy things that maybe you don't need on credit card, or not pay off your loans, or not look at your bills, that's a situation where you are broke and you're putting yourself in that situation. And the only way that we can get out of that situation is to understand that only we can save ourselves. Only we can save ourselves, right? At the end of the day, we can look at challenges as opportunities, or we can look at a challenge and say, oh, I'm just not meant for it. Oh, I'm just not good enough. Oh, I'm never going to be able to do it, right? And that's not what you want to do. You don't want to get into that fixed mindset. A fixed mindset tells us we are who we are and there's no changing that. Our level of intelligence, our personality, where we've been, where we've gone, all of that stuff, that's fixed. There's no changing it. That is it, okay? But a growth mindset has been studied and has been proven scientifically to be primed for success. When you have a growth mindset, that mindset is primed for success because you know that while everybody might not be Albert Einstein, we never know our true potential with the right time, the right knowledge, the right passion, the right energy, the right grit. Okay? And what you really want to do is go out there, look at these challenges as opportunities. All right? Like a lot of my clients that have come into this program, our coaching program, have said to me, I want to come out of COVID better than how I went in. I realize that now is the time for me to make this change. I don't want to be put in this fucking situation again. I don't want to be here anymore. I don't want to be in debt. I don't want to be unhappy. I don't want to feel like I can't reach my goals. Because you can. You can reach your goals. You do have that possibility. Money does get to be easy, okay, when you learn how to play the game to win. And that is what I'm here for. I am here to teach you how to play the game to win. And if you're like, I don't know where to start, Nicole, no problem. No problem. I've got you. I have built the resources. My whole purpose here is to lift you friggin' ladies up and show you that you have the potential, that you are worth it, and that you can get what you want in life. So if you haven't already, go over to the link in our bio, check out the 30 days to 100K challenge. It's free. There's literally no reason why you shouldn't go in. It is free information that is going to help you start changing your life. Get your butt in there. If you've already taken that program and you're like, hey, Nicole, I don't know what to do next. I think I need a little bit more help. This has been great. I am saving tons of money, but I know that I can do so much more. I know that I can have a different life. I know that I am made for big things. I'm here to tell you, yes, you frickin' are, okay? And maybe I want to see you apply for our 3-month coaching program because we have a 3-month group coaching program that is here to kick your butt and help you reach your full potential. It is called the Making Money Moves method. And the women, the mega money babes coming through this program, like they changed their whole freaking lives. They changed their whole freaking lives. They're paying off student loans. They are paying for their weddings in cash. They are buying their first home. They're buying rental properties. They are locking in their millionaire status in their 20s and 30s. Like they are doing incredible things. And that's not even to talk about the fringe benefits that come from getting your shit together financially. I had a call with one of my clients the other day, and she's like, Nicole, you know, after 1 week of working together, I was only sleeping 4 or 5 hours a night, and now I'm sleeping 8-9 hours every night. She's like, I am losing weight that I have tried to lose for freaking years that I couldn't get off, and it's just falling off now. It's just falling off. I am having better relationships with my husband than I have had in the last 10 years. These are the fringe benefits that come from getting your shit together. This isn't to mention the fact that she is saving $2,500 a month, that she has locked in her millionaire status in her friggin' 20s. Like, that's not to mention any of that. Those are the fringe benefits that came after a week of working together. So if you guys are like ready for something more and you're like, heck yes, Nicole, I am so ready to start taking control of my life. I want to master my money. I want to build a bank account that never stops growing. Then maybe you need to apply for a spot to be considered for our next round. Because I don't know if you guys can see this. I think you can see it on Facebook, but like, those are all the ladies. Those are the ladies. Those are the mega money babes in this next round already. We're almost sold out. We've had over 350 applications to work with us. Why? Because there's so many people that are like, yes, I know that ready is not a feeling. Ready is a decision. I'm ready to invest in myself. Instead of spending money on shit that I don't want or shit that I don't need or staying in the same situation, hoping, wishing, praying for a change, I'm going to go out there and I'm going to actually get it. I'm going to put my money where my mouth is, and I'm going to go and I'm going to work my ass off, and I'm going to have someone like Nicole kick my butt so that I can reach my full potential. Because guess what, guys? We wake up every day with the opportunity to choose who we want to be. So who do you want to be? Because you're choosing. Every day you wake up, you think it's a different day. It's not. It's the same day over and over and over again. It is the same day over and over again until you wake up and decide to make a change. So if you're ready to wake up, let's freaking go. I want to see you guys apply. This has been an amazing live. I have some calls now coming up. I got to jump off with some other mega money babes. Application calls all day, coaching calls all day. I am busy, but I love it so much. I'm here to freaking change lives. So if you guys need anything, again, head over into the free Facebook group. Search on Facebook, Master Your Money and Build a Bank Account that never stops growing. If you want to post any questions to get answered on the next live, I'm going to post this on Instagram and on Facebook. So if you guys want to go back and watch it afterwards, amazing. 111. Love you all so much. Thank you, ladies.